It is 9:04 a.m. Pacific Daylight Time. It is the second day of June 2026, and this is episode 1333 of Bitcoin, and that's a lot of threes. We've also got Strategy's sale causing a clash in the Polymarket bet. You know, at one point or another, people are going to figure out that they have to be very, 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 very detailed when they make markets. Otherwise, you're going to end up with problems like this. Here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. And honestly, other than, as you probably already are aware, Bitcoin's price crashing, there's not that much news going on, honestly, but there are a couple of ones. We're going to talk about Mt. Gox. We're going to talk about 21 Capital. Strive is in the news. Coinbase is in the news. Bitmarkets is in the news, and Capital B is also in the news. But let's start out what will probably be a short show with Strategy's Bitcoin sale causing clashes for the $80 million of Polymarket bets. This is Braden Lindria writing for Cointelegraph. Polymarket users who bet on when Michael Saylor's strategy would sell Bitcoin are in dispute with the prediction market platform over the timing versus the disclosure of the company's recent sale. You see, there were more than $80 million wagered on whether Strategy would sell Bitcoin by May the 31st, with users able to buy odds on yes or no. Strategy said in a regulatory filing that it sold that 32 Bitcoin that we all know and love between May the 26th and May the 31st. But the disclosure of the sale was made on Monday, June the 1st, leading the market to resolve to no, which caused confusion among users. Odds for Polymarket's MicroStrategy sells any Bitcoin by May 31st market have since fallen to 0.7 cents. Polymarket said in an additional context section of the affected market updated on Tuesday that any confirmation of a sale disclosed outside of the market's time frame doesn't qualify. Quote, no information from MSTR, on-chain data, or consensus of credible reporting confirmed that MicroStrategy sold Bitcoin within the market's time frame, the notice said. Several Polymarket users expressed, shall we say, frustration with the market. Quote, Polymarket should trade with truth, not technicalities, one affected user said. Another added it had made them lose a lot of faith in Polymarket. Quote, I am disappointed in this company today. Unbelievable, another user said. The market is currently awaiting the outcome of a second dispute, which is set to be decided by 12 a.m. UTC on Wednesday. If no statement is issued at that time, the order book will be cleared, Polymarket said. Saylor first pitched the idea of selling Bitcoin in the company's first quarter earnings call on May the 5th, stating that the sale would be to inoculate the market against sudden panic. He said at the time that market participants will realize that the company's fine, the Bitcoin's fine, the industry's fine, the world didn't come to an end. The sale contrasts with Strategy's previously long-stated promise that it would never sell its Bitcoin. And, of course, as we know, Bitcoin did fall. So there's a couple of things in here. First, I want to talk about the splitting hairs. The what was it? The K8 filing? I can't remember exactly what filing Strategy has to do with the SEC that says that they did sell 32 Bitcoin and they did it between, well, at least before and including May the 31st. But because the disclosure didn't come until Monday, Polymarket is saying, no. They're saying that there's no confirmation. I'm sorry, but that filing with the SEC is your confirmation. So at this point, Polymarket really is splitting hairs. Now, here's my question. Everybody knew that May 31st was going to be a Sunday. Everybody that took part in that market knew that May 31st was a Sunday. Everybody knows that the SEC and strategy is not going to announce the filing until the following Monday, or at least the next business day. I think both sides are sort of at fault here, is where I'm going with this. However, I'm going to state that Polymarket is more at fault because they really didn't clarify in this market, or at least, and I'm not exactly certain how Polymarket works. I don't know if it's the market maker that really needs to define the terms of the market, or if Polymarket comes back to the market maker and says, hey, you really need to redefine these terms. And if that's the case and they didn't, then it's sort of Polymarket's fault for not following up on this particular market. That said, I do think that Polymarket should pay out this market because it is confirmed that MicroStrategy did sell Bitcoin between whatever the dates, May 26th and May the 31st. So I think that the Polymarket users are kind of right in their ire against Polymarket. But this just goes to show, if you're somebody who bets on Polymarket, how well do you read that market? How well do you compare the dates and the times against when you know that information is going to be dropped, or rather, when you absolutely are certain that there's no way that you're going to get information until after the market date? And this one seems pretty cut and dried. They were going to sell by May the 31st, which was a Sunday. Let me confirm that. Was May the 31st a Sunday? Indeed, May the 31st was a Sunday. So, yeah, that should be something that people watch out for. Now, this second thing about what Saylor said about inoculating the market. I read something, it was yesterday or the day before, that he was talking about this, and he said, well, it was imperative for us to sell this 32 Bitcoin because the market needed to see that Bitcoin really is a liquid asset and that you can really sell it. I call bullshit. We know that Bitcoin is liquid. I don't need Michael Saylor and strategy to prove it to me. I know it because I can sell Bitcoin on Cash App, and people sell and buy Bitcoin for cash on Cash App just all by its lonesome all day long, and probably twice on Sunday. I don't need Saylor to say, well, if I don't do it, then the market will think that Bitcoin really can't be sold for cash. That's the largest cartload of horsepucky I've ever heard anybody say. Still, we are combating negative sentiment on Bitcoin in general. And that sentiment is coming from a couple of places. One is this whole strategy sale was not helping, but before Michael even started talking about selling Bitcoin, the market was going down anyway. I really think that there's two things at play for the price of Bitcoin. One, the AI play. Like I said yesterday, if it's not nailed down, a lot of shit's being liquefied to get into DRAM. That's that Round Hill Chip ETF, because it's honestly, it's going up. It's like up 1% today it's striking yet another all-time high for itself. The markets in general seem to be up, even though nobody knows nothing about what the hell's going on with the Strait of Hormuz, Iran. It's almost like radio silence with the media. It's almost freaking impossible to get anything out of these guys at this point about what the hell's really going on with the peace talks, with the Strait of Hormuz, with the Hormuz safe insurance plan that Iran came up with. No, we don't know. This is the most confused I've ever been trying to hunt down media reports about what's actually going on in Iran. Even Twitter isn't helping all that much. But it is what it is. The second thing is, I think Bitcoin price right now, I think the traders are trying to chase the last CME gap. There is one, and it's around $61,000 per Bitcoin. I think that the market is trying to chase that position to fill the very last CME Bitcoin futures gap that we have. It's not pleasant to think about. I understand that. But what's not also pleasant to think about is, like, if we came back up from here, that gap would still be there, like a specter, like a ghost floating around. And it's not Casper the Friendly Ghost either. It's like a piece of shit, maligned asshole ghost, the kind of like a poltergeist, kind of mean and just kind of drifting around, moving chairs and scaring the piss out of you. I kind of want to see the gap closed. I know it's like, God, I hate you, David. You want $61,000 Bitcoin. I'll bet you're one of the 58K gang. No, I'm not. I'm honestly, I'm over the whole 58K gang thing. But there is a gap. It is there. You can see it on the CME futures market for Bitcoin. It's around 61.7, somewhere around there. If we get all the way down there, we're back to where we were, kind of a few weeks ago. Okay, more than more than a handful of weeks, definitely. In either event, I just feel that it would be better all the way around to have that CME gap closed, because we're not going to get any more CME gaps. Not unless they're 2 minutes long or whatever. But it would be, I just think that the market is looking for some kind of stability, and having that gap down there, given what I've seen over the past couple of years, doing this show, those gaps actually do matter. And the market doesn't like having those gaps unfilled. So I can't help it. I'm projecting a downside pressure on Bitcoin that's not going to stop until that gap is filled. But again, even if it's not, it'll always be there. It would take months to get so far past that gap that people forgot that it exists. And I don't like that feeling. I just don't. But there's another pressure point that got put on, and it's always like they do this shit on purpose. I swear to God. Mt. Gox has decided of all times to move $739 million of Bitcoin from a cold wallet, according to Arkham. This is also Cointelegraph. Amin Haswanis is writing it. Defunct Japanese crypto exchange Mt. Gox moved $739 million worth of Bitcoin from its cold wallets early Tuesday, its first on-chain movement in over 2 months. Blockchain data shows the exchange transferred 10,306 Bitcoin worth approximately $730.8 million from its cold wallet to an unmarked address at 4:47 a.m. UTC. The transferred Bitcoin is currently marked as unspent by Arkham. The exchange also made a separate transfer of 116.3 Bitcoin worth around $8.25 million to its hot wallet at the same time, which is marked as spent. The transferred Bitcoin being marked unspent means the funds are sitting in the new address and have not yet been sent anywhere further. On the other hand, spent means those funds have already been moved on again to another address. The large movement has raised questions about whether the creditor distributions are imminent, which could weigh on the markets, as creditors who have waited over a decade to recover their funds may choose to sell once they receive their Bitcoin. Mt. Gox still holds 34,504 Bitcoin worth roughly $2.4 billion across its wallets, according to Arkham data. The exchange began repaying creditors in July of 2024, so a couple of years ago. And they've been doing it through partner exchanges Kraken and Bitstamp, but the process has moved slowly, with the rehabilitation trustee repeatedly pushing back the deadline. As you know, Mt. Gox was once the world's largest Bitcoin exchange, handling roughly 70% of global BTC trades. The Tokyo-based platform collapsed in 2014 after reporting that about 850,000 Bitcoin were missing, though roughly 200,000 Bitcoin were later found. In 2025, the exchange's rehabilitation trustee set October 31st, 2026 as the deadline for completing creditor repayments. That was the third extension since the original date of October 2023. In the broader market, Bitcoin slipped below 70,000. Yes, we are very well aware that Bitcoin slipped below 70,000. Good Lord. Timing. I'm almost convinced that Saylor, this Mt. Gox trustee, that they're all in cahoots. Now, can I prove it? Fuck no. No way I can prove something like that. It's complete tinfoil hattery. Yet the timing, I keep coming back to the timing. You got Saylor freaking the markets out with a measly 32 Bitcoin sale and some BS excuse about, well, if he didn't do it, the markets wouldn't think that Bitcoin was liquid, which, as I've said, is a cartload of horse bucky. Then you got the trustee. Just a couple of days after Michael Saylor does that crap, and the trustee of the largest question mark other than the CME gap, the largest question mark we got going on here is the whole Mt. Gox thing, which we haven't heard hide nor hair from in months. And yet here they come right out of the woodwork to pile on to what Saylor activated a couple of days ago. That really is sort of all it takes for shit like this to happen. And it can happen to any market. I've seen it happen in oil several times. I've seen it happen all over the place. It is not endemic to Bitcoin. I mean, Bitcoin is just going to Bitcoin. It's going to do whatever Bitcoin has always done. But still, I myself cannot get over the timing of all this. Of all the days, of all the time spans that you could have picked to start moving Bitcoin around, here we go. And it's like at one point or another, people are just going to be able to pick up some ultra cheap Bitcoin. And by ultra cheap, I mean somewhere around that CME gap. But it still doesn't make any difference. I'm going to have to cook dinner tonight, and I'm probably going to use the very last of my great ghee, which is sitting in the back of my fridge right now. And you can get yours at greatghee.com. That's greatghee.com. But use the URL that's in the show notes, because that's sort of my affiliate link. And it lets Great Ghee know that I made a sale for them here on the Bitcoin and podcast in the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will be buying in a Bitcoin, because if you're not selling in a Bitcoin, you're not in the Circle P. What the hell is ghee? Well, ghee is essentially butter, except it's been clarified, and it's done so through cooking. And what happens is that all the water and all the residual sugars and all the residual milk proteins and other solids are basically cooked out of it. It falls to the bottom of whatever you're heating the butter up in, and then what's left is pure 100% A2 animal fat from Great Ghee. A2 is a kind of milk that is the sort of the ancestral kind of milk. A2 refers to the genetics of the cow, the milk cow, or the dairy cow that the milk came from. And it's sort of known that this is like legacy milk. We've got milk that's got all kinds of different genetics. They've done that because they want more milk production or other things. But A2/A2 genetics is the milk that you're looking for, and that's what Great Ghee starts with. This stuff has a really, really high smoking point, 420 degrees Fahrenheit before it starts to burn. You can sear some serious steaks in this before you even get up to a smoking temperature. It's amazing stuff. Go get yours. Use the affiliate link in the show notes. That way, Great Ghee will be able to get me back on the other side with some Satoshis. Now, 21 Capital. 4 days. They just have 4 days to comply with New York Stock Exchange rules. Atlas 21, going to give us some more info. 21 Capital, that's Jack Mallers' outfit. It's the Bitcoin treasury company controlled by Tether and Jack Mallers as its public face, as until Friday, June the 6th, to remedy a violation of NYSE rules regarding the composition of its independent audit committee. If it fails to do so, the 21 stock will receive a BC, or below compliance indicator, visible on all market profiles, data, and news pages starting June the 9th, with further disciplinary measures to follow. They going to bend Jack over their knee and spank him? Anyway, the root of the problem traces back to the May 19th transaction, because on that day, Tether acquired SoftBank's entire position in 21, consisting of 89,106,748 Class A shares, simultaneously canceling the corresponding Class B shares. The transaction also terminated a governance agreement that had granted SoftBank veto rights over the composition of the board of directors and other significant corporate decisions. The two directors that were appointed by SoftBank, Jared Roscoe and Vikas Parekh, resigned on the very same day. The critical point is that Roscoe was a member of the audit committee. His departure reduced the independent members of that committee to just one, whereas the NYSE requires at least two during the post-listing transaction period. On May the 29th, the New York Stock Exchange formally sent 21 a non-compliance notification. The company stated it expects to appoint an additional independent audit committee member promptly, without specifying, however, who holds the authority to select a sufficiently independent director. Meanwhile, the company's financial backdrop is far from favorable. 21 holds 43,514 BTC, an asset worth approximately $3.1 billion, yet the entire company's market cap now stands below $2.5 billion. The stock has lost more than 83% of its value over the past 12 months against a backdrop marked by uncertainty over internal leadership, the arrival of Raphael Zagari, a figure very close to Tether, who has taken on many of the responsibilities previously held by Jack Mallers, and the failure to launch the promised commercial operations. So this compliance isn't about the share price. This disciplinary action is about the fact that they only have one independent auditor left on their board of directors, and they need two. So will they be able to pull this out of the fire in time? I don't know. I'm going to remain skeptical about all Bitcoin treasury companies. I mean, that you have to have a product or a service. You have to have revenue coming in. It doesn't work any other way. You can't just compile a whole, even if you were to do it in cash and you're just sitting on a pile of US dollars. That doesn't work. That's not a company. That's a bank account. And until 21 Capital starts, having a service that they can sell to people or get people to subscribe to, they got no revenue. And you just can't operate that way. You just can't. Let's run the numbers. CNBC futures and commodities. Brent North Sea is up 0.8% to 95.75. West Texas Intermediate is up a short row of sticks to $93.18. Natural gas is a hedge today. It is down just over 1 point to $3.14 per thousand. Gasoline is up 1 1/3 to $3.12 per gallon. And Murban crude is up 1.57% to 95.91. Metals are doing okay. It's a little lackluster. Palladium is up almost a full point, but gold is only up about 1/3 to 45.23 and 5 dimes. Platinum is up almost a full point. Silver is up 0.8% to 75.85 an ounce, and copper is up almost 2 full points. Ag is mostly in the red today. Biggest winner is chocolate, 5 1/3 to the upside. Biggest loser is, where is it? Wheat, almost 1 full point to the downside. Live cattle down 0.8, lean hogs up 1.6%, and feeder cattle down 1 1/4. The S&P is up 1/10. The NASDAQ is up 1/3 of a point. The Dow is up almost 1/4 point, and the S&P Mini is up 0.66%. And then there's Bitcoin holding it in there at $67,690 a coin. It's a $1.36 trillion market cap, and we can only purchase 15 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,037,676.15 of. Average fees per block are slightly high today, 0.03 Bitcoin taken in fees on a per block basis. It's about 45 blocks carrying 112 unconfirmed transactions waiting to clear at 4 sats per VByte. Low priorities will get you in at 2. Hash rate has fallen. 963 exahashes per second is the amount of security on the Bitcoin network at this time, and I'm totally fine with it. The Bitcoin and podcast is on bitcoinandshow.com. That's the website. If you want to go find the small write-ups plus a link to the actual the podcast itself for that episode, it is on bitcoinandshow.com. I include a little bit of art. I make a synopsis of what I talked about, that day, so that you can get a bite-size view of what the hell happened in word format if you are so inclined. From Bombing Strategy, yesterday's episode of Bitcoin, and I got Jub with 1,123 sats says, attention shoppers, sats on sale in aisle 5. Tehran, 333 sats says, thanks. I appreciate that, pal. Nick Dose with 224 says, cheers. And Noster Gang with 101 says, thank you. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. Coinbase exec sees path to crypto's Dodd-Frank moment as the Clarity Act is heading to the Senate floor. Micah Zimmerman, Bitcoin Magazine. The fate of America's current crypto market may hinge on a Senate vote expected this month, and few people are watching it closer than Coinbase Chief Policy Officer Faryar Shirzad. In an interview on Fox Business's Mornings with Maria, that would be Maria Bartiromo, otherwise known as the Money Honey, Shirzad made the case that the Digital Asset Market Clarity Act, known as Clarity, represents the most significant financial regulatory legislation since Dodd-Frank, and that passage is within reach. Quote, this will be the biggest financial regulatory bill that Congress has done in quite some time, certainly since Dodd-Frank. What this does is it creates clarity for the crypto sector, he said. The stakes are high. Wyoming Senator Cynthia Lummis issued a blunt warning on X May the 29th, telling lawmakers this Congress represents the final window for action. Quote, the next window for digital asset legislation after this Congress is likely 2030, Lummis wrote. Quote, until then, developers remain exposed with no legal protections and law enforcement remains without the tools to hold bad actors accountable. The Clarity Act solves both, end quote. The bill cleared the Senate Banking Committee in a 15-9 vote May the 14th, with Democratic Senators Ruben Gallego of Arizona and Angela Alsobrooks of Maryland crossing party lines to support it. But the full floor vote, that's a different problem in math. The bill needs 60 votes to clear the Senate, and with November's midterm elections compressing the legislative calendar, the window for passage is measured in weeks. Shirzad expressed confidence that the numbers are there. Quote, "The Republican caucus is pretty unified. The president's been putting a shoulder into this, and there's a very large group of Democrats who want to get this done. We've got about 80 Democrats in the House who did vote for this, and I think we'll get a proportional number in the Senate. President Trump has made crypto legislation a priority. Shirzad framed that the bill is not as a crypto versus banks fight, but as an expansion of opportunity for the traditional financial sector. Quote, "This is going to be the first piece of legislation since the 90s that gives banks new authorization to get into the crypto space. I know JP Morgan wants to get into it. Every other big bank wants to get into the crypto sector, and we welcome their entry," end quote. Pausing to say Jamie Dimon isn't all that happy about this bill. I talked about that yesterday. Coinbase's confidence extends beyond legislation. The exchange scored a significant regulatory win May the 29th when the Commodity Futures Trading Commission issued guidance that cleared Coinbase financial markets to connect U.S. institutional clients to global crypto derivatives markets. Coinbase Financial Markets became the first CFTC-regulated futures commission merchant to offer domestic clients access to global crypto perpetuals. Quote, "This is a big regulatory unlock," Shirzad said. "It shows that U.S. regulators are trying to execute on what the president has said, which is to bring the crypto markets onto United States soil." On the state of the broader crypto market, Shirzad pushed back against any notion that the big trades are behind investors. Quote, "We're even more bullish about crypto as a technology. Crypto is now the accepted upgrade of the financial system." Maybe a little hubris there. I don't know. He described the coming era as tokenized. You saw that coming. Financial applications built on blockchain rails, with the Clarity Act providing the legal foundation that would unlock participation from both crypto native firms as well as legacy institutions. One live issue remains the stablecoin reward provision. Senators Thom Tillis and Angela Alsobrooks brokered a compromise in May that bars rewards on stablecoins that are economically or functionally equivalent to bank deposit interest while preserving activity-based incentives. Shirzad said the language is settled. Quote, "The key architects of that compromise have been clear that the language is fixed. This is the compromise they intend to defend with their colleagues." And then we go into the part where Jamie Dimon calls Coinbase's Armstrong full of shit, which we don't need to rehash. So let's move on to Strive. Strive, ticker symbol ASST, adds $185 million in Bitcoin as holdings reach 19,000 Bitcoin. Micah Zimmerman, Bitcoin Magazine. Strive Incorporated moved on weakness in Bitcoin's price, acquiring 2,500 Bitcoin for $185 million at an average cost of $74,092 per coin. The purchase, disclosed via an SEC Form K or 8K filing on June the 2nd, lifts the Dallas-based treasury company's total Bitcoin holdings to 19,000 even, planting it among the top 10 publicly traded corporate holders of the asset. Strive launched in 2022 as an anti-ESG asset manager founded by entrepreneur Vivek Ramaswamy with a focus on shareholder-first capital allocation. In September of 2025, shareholders of Asset Entities Incorporated approved a merger with Strive Enterprises to form a combined publicly listed entity under the ASST ticker. The transaction gave Strive an initial 69 Bitcoin through a Section 351 exchange and opened the door to large-scale Bitcoin accumulation. CEO Matt Cole, who previously managed a $70 billion portfolio at CalPERS, and held direct relationships with the Fed and Treasury during quantitative easing, reoriented the company toward structured finance and a Bitcoin treasury model. Under his leadership, Strive has grown from 0 Bitcoin to 19,000 in just under a year. Using a mix of equity offerings, its variable rate Series A perpetual preferred stock SATA, as well as capital markets activity to fund purchases. Strive also said yesterday it plans to expand its at-the-market fundraising programs by $4.2 billion, increasing both its common stock and SATA preferred stock offerings by $2.1 billion each to accelerate Bitcoin accumulation. Strive's ability to keep acquiring Bitcoin at scale depends on its layered capital structure. SATA, its perpetual preferred shares listed on NASDAQ, targets $99 to $101 trading range and is designed to minimize volatility while generating recurring dividends. The company pairs this with Class A and Class B common equity and cash reserves. In the June 2nd filing, Strive reported cash of $137.3 million. That's up $44 million over the measurement period, and confirmed it maintains an 18-month dividend reserve. The quarter-to-date BTC yield stands at 23%, and the year-to-date yield at 36.7%, with an amplification ratio of 57%. No, I don't know what amplification ratio is. These metrics matter because Strive frames its performance not in dollar returns, but in Bitcoin-denominated terms, the goal being to outperform raw Bitcoin exposure and justify the equity premium. The backdrop for Strive's purchase is the first confirmed Bitcoin sale by Strategy since December of 2022. Yes, and we know all about that. Strive plans to make its SATA preferred stock the first U.S.-listed security to pay cash dividends every business day, maintaining a 13% annual dividend rate that compounds to an effective yield of about 13.88%, while backing the strategy with a growing Bitcoin treasury. The company says the structure is designed to appeal to income-focused investors seeking frequent cash flow, while also providing exposure to Bitcoin through a debt-free balance sheet and a continued Bitcoin accumulation strategy. And you already got knocked off your shit by doing that at $74,000, which causes me to ask, any number of questions. I always have questions. And this question is about, in the environment that we're in, do you think that was a good move? And I'm not asking you, I would be asking this to, if I was interviewing somebody from Strive. And I just can't help but to wonder what that answer would be. I mean, you had an accelerated decline in Bitcoin price at the time that Strive decided to spend a lot of money buying Bitcoin, and they're already underwater. I mean, does that make them nervous? Did they already plan on that? Because I could see it. If you got a plan, I could see somebody saying, yeah, we're going to buy this. We know it's going to lose, but we're just going to go ahead and accumulate right now and wait, or do whatever their strategy is. But what I wonder is it possible that Strive was like, oh yeah, man, this is it. 74,000. It's not going to go any lower. We're only up from here. Let's buy. If that's the case, then I'm kind of worried about the guys over at Strive, because all you have to do is look at the momentum in the charts and go, you might want to wait. Because even these guys know that there is that CME gap at around 61,700 to fill. I'm all constantly bitching about Strategy buying Bitcoin during the week, only to see a drop in price on the weekend. Or like they'll buy the majority of their shit Monday through Thursday, and then here comes Friday, and it's like boom. You start seeing some downward momentum. So from the Strive standpoint, I don't know. I listened to an interview with one of the guys from Strive, and his amount of irrational exuberance kind of caught me a little off guard. And I don't know, man. I I would stay away from these perpetual preferred products. I don't like them. I keep wondering where the hell the yield comes from, and I know it's from this premium. You buy in at a higher Bitcoin price because yield, but then they kind of use that to pay the dividend, and I don't like that. It just seems really funky to me. So just buy Bitcoin and hold the Bitcoin, even though I know it's hard right now, but we have been through these times before. This isn't new. It's not. Capital B seeks $122 billion funding mandate to buy more Bitcoin. So Zoltan Vardai out of Cointelegraph is going to tell us about these guys and maybe that they've got irrational exuberance at this point. Who knows? Well, let's find out. France-listed Bitcoin treasury company Capital B is asking shareholders to approve a massive new delegation of fresh capital raising instrumentation, seeking authority to issue new equity and credit instruments to accelerate Bitcoin acquisition. Capital B submitted a new proposal to the board of directors seeking to allow the establishment of up to 5 billion euros in capital increase through 125 billion shares at current nominal value and $116 billion in credit instruments, said Alexandra Lezay, the board director of Bitcoin strategy at Capital B, in a Monday X post. Shareholders can cast their votes online until the company's combined general meeting on June the 17th, so mid-month. The request comes as Capital B continues to accumulate Bitcoin while other smaller treasury companies are selling holdings, winding down strategies, or turning to hedging programs as market pressure builds. The shareholders' motion was filed 2 weeks after Capital B acquired another 192 Bitcoin for $15.2 million at an average purchase price of $79,000 per Bitcoin, bringing its total holdings to 3135 BTC at the time. Capital B later announced a separate 4 Bitcoin purchase on Monday, lifting its total to 3139. To date, Capital B said it raised around $325 million in capital, following its $17.8 million raise from strategic investors, including Blockstream CEO Adam Back and Paris-based asset manager TOBAM. Capital B's share price fell by around 7% following the announcement and traded at 56 pennies per share as of 10:17 a.m. UTC. The company's shares are now down 44% over the past 6 months, with Bitcoin's price falling by over 19.4%. Capital B ranks as the 25th largest Bitcoin treasury firm, and it ranks as Europe's second largest, following Germany's Bitcoin Group SE, which holds 3,605 Bitcoin. Capital B's bid to scale up its Bitcoin accumulation comes as some of the smaller Bitcoin treasury companies are winding theirs down. On Thursday, France-based semiconductor company Sequans Communications said it had concluded its previously announced digital asset treasury strategy and shared plans to refocus solely on Internet of Things semiconductor growth. Yeah, and we talked about that was it last week? I think it was last week. Yeah, I think it was last Friday's show. And then they talk about Michael Saylor selling 32 Bitcoin, which nobody seems to be able to not talk about. It's 32 Bitcoin. Holy shit, guys, everybody stop freaking out. Then there's Bitmarket's AI-driven wealth management program. It's reporting a nearly 45% unrealized gain in Bitcoin amid volatility. So what's this all about? Automated trading using artificial intelligence. Let's see how well they did. Bitmarkets has released an annual performance data sheet for its flagship wealth management program. The results highlight that the platform's proprietary AI-driven algorithmic strategies are yielding up to 44.51% in unrealized gains denominated directly in Bitcoin. Facing a notable market correction over the last 12 months, the active product framework significantly outperformed a passive buy and hold approach. The BitMarket's wealth management program operates on a structured, rolling 12-month cyclical basis. Upon completion of each 365-day tracking cycle, investors lock in their definitive performance outcome. Historically, the vast majority of these systematic cohorts have securely closed in net positive territory. The wealth management program manages investments with precision by trading major digital assets through sophisticated, you mean snobbish, AI-powered strategies that align with market dynamics and individual client financial objectives. I know it sounds like an ad. It very well may be. Who knows? The latest internal performance review of two active strategies nearing their respective June and July 2026 maturation dates indicates continued algorithmic performance within the tracked period. The performance difference becomes visible when the iBitMarket's wealth management strategies are compared with the standard passive Bitcoin benchmark over the past 12 months. In June of 2025, Bitcoin traded at macro highs near 95,000. Over the subsequent 12 months, broader digital asset markets entered a cooling period, driving Bitcoin prices down to roughly 69,400 by the beginning of July 2026. Consequently, a passive spot buy and hold Bitcoin approach over the same period would show a nominal fiat drawdown of roughly 30%. But by contrast, the reported wealth management strategy results indicate that active algorithmic approaches may help manage exposure during periods of market decline or stagnation. So what they're doing is using automated algorithmic trading. Now, as to whether it really is AI driven, honestly, is anybody's guess. It may just be a buzzword. But if their numbers are correct and they're not using AI, then they're just using algorithmic automated trading, we can see the problem. You don't have an algorithm trading for you 24/7, do you? Neither do I, and neither do most people. I'm starting to see a divergence in retail versus institutional markets. Retail is not going to be able to do what institutions are doing. So if you're a retail trader or you're basically managing your own wealth funds, you're just not going to be able to have the kind of performance that these institutions are going to have, at least in the short to medium term. What bugs me about the algorithm stuff is, when does it break? And I'm not talking about the algorithm itself. I'm talking about the wider trading ecosystem globally. What happens when you get a bunch of computers that are basically making micro trades on the millisecond time scale? You know, when just a few people were doing it, hell, they had the edge, man. But there was only a few people that were actually able to execute that. That's not the case any longer. Because even if this wealth management is not using AI, they will be. They will be. And there's going to be some bots that do really well at it, and there's going to be some bots that don't. But the ones that don't will be ejected for the ones that do in short order. And the next thing you know, you're going to have a bunch of AI-driven algorithms doing microsecond timescale trades all over the place. And you're not going to have that. What could this end up doing? Well, it could very well end up consolidating all of retail into gigantic institutions. So consolidation is on deck for a whole bunch of things. But then even at the institutional scale, you know, like Texas A&M's retirement system. Let's just look at Texas A&M, big school. It's not just a big school, it's a big system. They have multiple campuses in Texas. Texas Tech system is the same. University of Texas, they have a system too. They have multiple colleges, or rather multiple campuses. And that was done, there's a lot of university systems, but when we think about university and the retirement systems, you're talking about very, very large retirement systems. Do they have the ability to trade themselves? Do their wealth managers that handle all that, are they able to take part of this? They might be at the scale of Texas Tech, UT, and University of Texas. Very well might be. But what about smaller universities that aren't quite so blessed with a shit ton of money? Are they going to be able to do that with their endowments, with their retirement systems? Probably not. Which means what? They're going to have to offload their retirements. And, well, actually, their retirements are probably already offloaded to larger third-party systems. But their endowment structures, because that's a whole other thing. That's what keeps the university going, is basically managing the wealth of the people that donated money to their alma mater or just to a school that they really love for whatever reason. And the interest off of those investments that's in the endowment is used to pay things like endowed chairs, like a chairman of a department. If it's an endowed chair, then all of the benefits that whoever sits in that chair, the chairman of the department that has an endowed chair, like all their retirement, all their vacation pay, all their sick leave, all their actual payroll, their retirement matching, all of that, health insurance, that's all paid out of the endowment. And if they're managing it correct, it's paid out of the interest earned on the endowment. And there's enough left over after all the endowment pays out to actually buy more stuff to produce more interest on the endowment. The endowments are, generally speaking, those are managed not by third parties. Now, in the larger universities, maybe. But in the smaller universities, of which many of them do have endowments, they're in-house. And they do not have access to AI-driven algorithmic micro timescale trading. What bugs me is that some of these smaller, and we're just talking universities. There's all kinds of other types of institutions that are in the same boat. But staying at the scale of universities in the United States by itself, are these guys going to have to offload their endowment management to a larger third party that has access to algorithmic trading so that these guys aren't the ones that are getting hosed? Only time is going to tell. But if it does happen, then you've got gigantic financial institutions getting even more gigantic, and we know what consolidation does. It centralizes more than you want centralized. I think that this algorithmic trading thing I think it does have the potential to break something in the ecosystem. I just don't know what. Although I can almost guarantee you that the first bodies that will wash up on shore after that naval battle is going to be things like smaller university endowment funds. We'll have to see. All right, that is the last that I had for you today. I know everybody's looking at the charts. Everybody's tearing up. But remember, if you just got in and you're seeing your first drawdown, several of us have been through this before several times. Many, many, many times. In fact, there's a lot of us that have been around since, like I've been around since 2015. In fact, that was my first Bitcoin. My first Bitcoin purchases were at the very bottom of the 2015 bear market. It was the end of the summer, getting into September, October. Price didn't move much, right around there. But what I did not know, because I wasn't looking at charts, man. I wasn't a chartalist, bro. I was like, I was just excited about, holy shit. I can buy stuff without a bank. You know, I hold my own private keys. That's like I was learning that those were the things that I was learning about at the point. What I did not recognize, because I wasn't on Bitcoin Twitter at the time, which was on fire. 2015 Bitcoin Twitter was on fire, but I didn't really know yet about Bitcoin Twitter at the time. If I had, what I would have seen is a shit ton of bearish sentiment. People really sad coming down off of $1,100, crashing down to like 110 and then popping back, or actually I think it came down to like 200. Right? I think I got my first Bitcoin somewhere around 250. And what I would, if I had gotten on Bitcoin Twitter at that time, I would have been like, why the hell am I in this trade? Of course, I didn't call it a trade at the time, but I would have been questioning my actions. Like what, did I just like blow $250? Thankfully, I didn't know anything about Bitcoin Twitter at the time. I didn't know it was a thing. Right? So what I'm getting at here is that I was happy simply because I didn't know any better. I didn't know the negative sentiment of that bear market, because that bear market was a brutal bear market. But I had no clue that it was. I was just doing my thing. But now I'm affected by sentiment. I'm affected by negativity. I'm affected by getting on Twitter and it's like, oh my God, Peter Schiff is saying it's going to crash again. Like I give a shit what Peter Schiff has to say. Yet you see enough negative sentiment, it'll shake you out of your position. And that goes with any market, by the way. But Bitcoin is especially brutal. The volatility, a lot of people can't handle it. But I keep thinking that it's important that I got in at the bottom of a bear market that everybody hated. And if I had listened to them, if I knew that they existed and I could actually hear their voices, I probably would not have been as happy. So be careful with how you let negative sentiment affect your decision making. What do you believe is true about Bitcoin? Because if you got into Bitcoin simply because of positive sentiment on Bitcoin Twitter or something like that, you got in for the wrong reason. You got in for, I'm going to be a millionaire by the time I'm 24. That's no, dude. Not the way this works. If you got in because you wanted to have some kind of sovereign control over wealth, even in a volatile situation, that's one of the good reasons to get into Bitcoin. If you wanted to learn what money is without government control, that's a good reason to get into Bitcoin. If you want to be able to perform a transaction that is fully sovereign between you and whomever you choose, that was a good reason to get into Bitcoin. So if it's a bad reason to get into Bitcoin because of positive sentiment, what do you think I say next? It's probably a bad reason to get out of Bitcoin because of negative sentiment. Let the people cry. We'll change their diapers later. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.